Hi there, Serial Trader here. Have a quick look at the major indices, although not a whole lot has changed since last week's video. So we're starting to roll over here. I'll leave the wave count unchanged because there's no reason to make any changes to it at the moment. The key levels up here held. We didn't make any new all-time highs, and so far it looks kind of like a double top formation. At least in the short term, we've started a little bit of a downtrend here. So not really much to go through as far as this wave count. I've gone through it before in previous videos. It remains unchanged. So if this works out, we're definitely looking for a move down here to challenge or even penetrate the lows that we saw there in August, early August. So we'll stick with that until we have a reason not to. Still short one ES contract from 3010, and at this point I've moved up my stop loss to past break even. So if it keeps working, I'll let it keep running, but if it comes up and stops me out, then whatever. It's a free opportunity at this point. Okay, so I think I'll just leave it here. Definitely currently still expecting a proportional move down compared to what we saw near the end of July towards early August, looking for a leg down of similar magnitude at least, if we're just doing a AVC down. And if we go significantly lower, have to entertain the possibility we might have a 1, 2, 3 down in progress. But for now, I'll just kind of stay on the more conservative side and just expect kind of a measured move down, and possibly look for maybe a double bottom type scenario around these let's call it 28, low 2800s as far as levels go. But we'll have to see. It's still been pretty slow as far as getting going down here, so there's still certainly the possibility that this is just a little pullback and then we're going to try again. But I think certainly this month, October, tends to be a more eventful month than most historically. So October should certainly break the stalemate we've been here between either looking for new highs or looking for another corrective move down. Okay, so that's really all there is to say about that. For now, we'll go to the Thinkorswim charts. Now, from a candlestick perspective, on the daily here, we've certainly lost our moving average uptrend here. So we've crossed below the T line. We continue to close below the T line. The 3 T lines cross below the T line. So things are pointed down at the moment as far as these shorter term trend following indicators. And we're not quite in the oversold condition here on the oscillator. So certainly further room to run before we are oversold. And as far as daily candlestick pattern, I believe this is just shy of being a bearish engulfing candlestick. So we opened this previous candle on Thursday at 29.8573. This candle opened at 29.8547. So by less than a point, it doesn't quite meet the ideal definition of a bearish engulfing. Although certainly it has the spirit of a bearish engulfing, and almost engulfing the 2 prior candles, but technically not quite up to the standard. Okay, so that's just the daily candle chart there. We'll look at the weekly. So weekly candles on SPX. What do we got going on here? Okay, so we had potential hanging man a couple weeks ago. Then we had a gravestone doji, and now kind of another doji, although the real body is a little bit on the large side. But basically still an indecisive candle. A bit of an upper and lower shadow there. Still above the weekly T line. So you'd like to see that break and close below the weekly T line to kind of confirm a larger downtrend in play. So we're not quite there yet, although that could certainly happen after this coming week here. So definitely some early signs that things are rolling over. We'll see how much follow through there is. Okay, that's SPX. Go to the Dow Jones, see if there's anything interesting going on there. And let's see here. So the Dow, similar. We made basically a double top below the all-time high. We are rolling over now. We've lost the T-line, T-line cross below the T-line. Not quite in the oversold condition on the oscillator. Not quite even touching the 50-day simple moving average. So that might be at least a reasonable short-term target to the downside. Perhaps we bounce off of that at least temporarily, or might actually provide a support level. But we'll have to see how it reacts when it gets there. Weekly chart, nothing significant. Basically a doji star on the weekly, so indecisive. Still above the weekly T-line, so nothing confirmed to be overly bearish just yet there on the weekly, although it's got the potential. Okay, so that's the Dow. Nothing too different going on that. I just want to quickly check SPX. I think I forgot to mention. Yeah, we basically had to bounce off the 50-day simple moving average there on Friday. Now, oftentimes when you get down to these averages, just because you bounce off them doesn't mean they're going to hold, but there's certainly that initial reaction where perhaps you have programmed buying that comes into play at significant averages such as the 50 or the 200. Doesn't mean that buying is going to keep going and hold it above there. The selling pressure may still overcome it, but you just get that initial reaction. So obviously there are people or machines watching these averages. That's certainly not a mystery, but that's all I had to mention about that. Okay, so on to the NASDAQ composite. NASDAQ composite daily here, and the NASDAQ it continues to just look the weakest. It has the most bearish tilt to it here. So again, we failed nicely at around that 786 retracement from that decline that started in July. And yeah, we're well below the T-line, 3 T-lines cross below the T-line. We're well below the 50-day simple moving average, closing well below it as well. Not in the oversold condition here yet on the oscillator. So the NASDAQ looks like it's kind of leading the pack down, and that's certainly a larger sign of overall weakness, since the market tends to be quite tech heavy as far as what things move the market. There's certainly a lot of tech names in there. So yeah, definitely looking for lower lows still on the NASDAQ, and this basically is the highest confidence chart as far as looking to challenge or exceed the lows we saw in early August. But obviously, if the NASDAQ does it, you can rest assured that the Dow and the S&P likely will as well. But they might just lag the action here a bit. So perhaps we have the bearish leader here on the NASDAQ, and that's certainly not unusual. Okay, now that's the daily. Don't really have a candlestick pattern here per se. Obviously, certainly a negative day, but not a particular sell signal, at least not on Friday. We did have this nice bearish engulfing here. Let's see what day that was on. So Friday, Thursday, Wednesday. So on Tuesday we had a nice bearish engulfing, and obviously so far we've had good follow through from that. So that's a valid signal that's obviously playing out to the downside. Weekly NASDAQ composite, what do we got here? Okay, so the NASDAQ composite has lost the T-line on the weekly, closed well below it. We're about to get that bear cross with the 3 T-line crossing below the T-line. So this, yeah, even on the weekly, it's certainly leading the markets down. So I'm liking the idea. We're heading down to test or exceed the the early August lows there. Certainly the NASDAQ wants to. Okay, so that's the NASDAQ. Go the VIX, and the VIX. Certainly jumpy, but it looks like we might have a decent pivot in place here on the VIX, and that low came into play here at 1331. So just bigger picture, you do have a bit of a VIX uptrend here still in play. You got your high, higher low, higher high, another higher low. So now we're going to go up and see if we can break out of this range again. And VIX closed above 17 there on Friday, so that's fairly bearish here. You're starting to get a golden cross on the VIX, where your 50-day simple is crossing above the 200-day simple, and obviously the actual VIX itself, the level, closed above both those averages. So a golden cross on the VIX isn't a particularly bullish development for the market, that's for sure. So we'll continue to watch this, and let's see. So let's go to the VIX VVIX tool to wrap things up here. And the sell signal certainly still in play here. So we had the divergence between VIX and VVIX. And then we had VVIX get above its red moving average. We had SPX get below its blue moving average. And other than some intraday tests of those, we're largely intact here on the sell signal. So SPX continues to trend below the blue moving average. VVIX continues to trend above the red moving average. And now both VIX and VVIX are in uptrends and SPX is in a downtrend. So we're on a sell signal here according to this kind of mechanical tool. So definitely, until there's a reason not to, we can certainly be looking lower here. Okay, well, that's all I really had to say. We'll see how this week plays out. End of a quarter, beginning of a new quarter, and end of a month, beginning of a new month, coming right up. So should be interesting. We've certainly seen big action in October in more than one instance. Last year was certainly a good example, but there are other examples even in this long-running bull market we've been in, where October wasn't such a nice month for bullish trading. So we'll see if it lives up to its fearsome reputation. All right, Serial Trader signing off.